Stake lets you invest in UAE real estate for as little as 500 dirhams. No millions needed. But is it as rosy as it seems? Hello fellow Arbab, it's time to boss your money. I'm Kenneth and I've been working in finance and auditing for almost 2 decades now. And I've spent the last 2 weeks deep diving into Stake's actual model, their fees and property selection, because I get so many comments asking me to make a video on Stake. Here's what nobody's explaining. Stake isn't for everyone. For the right investor with the right strategy and the right amount of capital, it could make sense. By the end of this video, you'll know exactly whether you should use Stake or skip it entirely. Alright, so what is Stake? At its core, Stake allows you to invest in UAE real estate without needing millions in capital. Stake actually has 3 different products. They have Stake properties. That's what we're going to discuss in detail today. This enables you to buy fractional ownership of specific properties starting from 500 dirhams. They also have Stake Fund. It's like a REIT, but it's focused in Saudi Arabia. Diversified real estate exposure in one fund. They also have Stake One. This lets you buy an entire property for yourself using Stake's platform to reduce hassle. Today we are focusing on Stake properties, as I said. The fractional ownership model, since most of you guys are in UAE and don't have millions to buy fancy villas outright. Here's how it works. Stake lists a property. It could be a studio, it can be a 1-bedroom, it can be a villa. You buy fractional shares starting from as little as 500 dirhams per transaction. Stake then creates an SPV or a special purpose vehicle in DIFC that owns the property. You own shares in that SPV. You get a title deed and a share certificate. You receive rental income distributions. You benefit from property appreciation. The concept is clever. Fractional real estate, professionally managed, accessible to regular people. But here's the reality check. Let me be crystal clear about who should not use Stake before I explain who Stake is great for. The first red flag I see is short-term money and emergency fund. Don't use Stake if you might need this money in 6 to 12 months. Why? Because there's a minimum 1-year lock-in before you can even try to exit. Exit windows are only twice a year, May and November. And each of those windows only lasts 2 weeks each. There's no guaranteed buyer. You list and you hope somebody buys. And there's a 2.5% exit fee just to get your money back. If you invest in March and need your money in October for a dental emergency, tough luck. Wait till November, pay the exit fee and pray somebody wants your shares. This is not liquid money. The second red flag I saw is that if you're just starting with small amounts like 500 dirhams to 1000 dirhams, then it might be an issue. Why? Because fees destroy returns. Here's how Stake's fees work. Acquisition fee 1.5% every time you invest. Annual admin fee 0.5% per year. KYC fees 0.2% initially and then 0.1% annually. Exit fee, as I said, 2.5% when you sell. On top of all this, if your property does do well, there is a performance fee of 7% on appreciation profits. That's 7.1% in fees irrespective of if you made a profit or a loss. And that's not including the 7% they charge on profits if you make those profits. For reference, you can get a global ETF for about 0.07% per annum or 0.35% for that same 5-year time period. Here's the third red flag I saw. Don't use Stake if you haven't built your investment foundation yet. You don't have US stocks, India exposure, emergency cash sorted. Stake should not be your first investment. It's a tactical allocation that comes after you've built your foundation. I covered my full allocation strategy in my portfolio video in great depth. I'm very proud of that video. If you haven't watched it, go check it out. Link at the end of this video and in the pinned comment. That should be your foundation blueprint. Okay, so who is stake actually for? Here's what I think is an ideal profile for you to even consider stake. You have a minimum of 50,000 to invest, which has been specifically allocated for real estate in UAE. You've already built your foundation, which you can get more information from my portfolio video. You have a genuine 5+ year time horizon. You want exposure to specific properties you've researched, and you understand and accept the liquidity issue. If you check all 5 boxes, let's talk. Missing even one, skip stake. Here's a strategic use case example. Let's say you have 200,000 dirhams earmarked for UAE real estate. You've researched and believe in a specific project. The property might cost you 5 to 6 million dirhams to enter. Your allocation is 200,000 dirhams. That means it would give you 3 to 4% ownership of one particular unit. Why does this work? Because you have specific conviction in that location. You get title deed ownership through that SPV. You have long-term appreciation play, and it's not your emergency money. You can then also diversify the same 200,000 across 3 or 4 different properties. Here's the math. You invest 200,000 dirhams. The property doubles from 5 million to 10 million over 5 years. Your share therefore goes from 200,000 dirhams to 400,000 dirhams. Now you have acquisition fee of 1.5%. That's 3,000. Annual admin fee of 0.5%. That's 5,000 dirhams over 5 years. Your KYC fees, which is 0.2 in the beginning and 0.1 for the remaining years, that adds up to 1,200 dirhams. Your exit fee of 2.5%, that's 10,000 dirhams. And then you also have the performance fee of 7% on the profits, which adds up to 14,000 dirhams. All this together puts your total fees alone at about 33,000 dirhams, leaving you with a net gain of around 167,000 dirhams. That's about 13% CAGR. Now that makes sense. Meaningful capital, meaningful returns. Of course, you have the risks, but risk comes with any sort of investment. If you want to get into real estate with a small-ish amount, this would not be a bigger risk than, say, going all in on one property. But small amounts really don't make all that much sense. If you use the same calculation but invest 1,000 dirhams instead of 200,000 dirhams, you would have made a profit of around 800 dirhams in total after 5 years. And that is if your investment doubles in 5 years. On top of that 800 dirhams, you would have made 60 bucks a year in rental income if your property is rented. You know what else you could have done with that 1,000 dirhams? You could have taken a Udemy course, bought some books, upskill, negotiate for a 500 dirham raise. That's 500 dirhams a month, not once in 5 years. That's also 30,000 dirhams over a period of 5 years. This is why stake only works at scale. From 200,000 dirhams to 400,000 dirhams, that's life changing. From 1,000 dirhams to 2,000 dirhams is not worth the hassle, in my opinion. Here are some of the pros I see when used correctly. 1. Specific property exposure. You choose what you believe in. 2. Professional management. No tenant drama, no hassle. 3. Access to premium properties you couldn't afford solo. 4. Mobility. You keep the property even if you leave UAE because you have the SPV. 5. You have diversification across multiple properties. Here's what I would actually do. If I had 200,000 dirhams for UAE real estate exposure, I would consider a couple of options. 1. Stake. 50,000 in a premium villa project, 50,000 in a prime location 3-bedroom, 100K split in 2 other properties. The second option I would consider is invest in UAE dividend stocks instead. I'd split it in stocks like MR for some real estate exposure, Salik, Diva, Parkin, Adnoc, and so on. And like stake, I would collect rent in the form of dividends in this case for regular income. And like stake, I would also get growth in my asset value, growth in property price in the case of stake, and growth in stock price in the case of buying dividend stocks. But this option also gives instant liquidity and diversification. I'm not waiting for 2 2-week windows per year to sell, which I'm also eligible only after completing my first year. I can sell after 3 weeks if I wanted to. The third option I might consider is a hybrid approach. Maybe 100K in stake, invest in 1 or 2 properties I really believe in, and the remaining 100K in UAE stocks. Personally, I'd lean towards option B or C because I value liquidity. But if you have strong property conviction, option A could work. Again, this is after you've built your foundation. Check my portfolio video to understand how I think about the big picture. If you are signing up for stake, please consider using my link in the description and pinned comment. Using my links and liking my videos supports me a great deal and helps me bring tons of kick-ass videos like this. Before you invest a single dirham in stake, answer these honestly. Can I afford to lock this money up for 5+ years? If no, don't do it. Have I already built my investment foundation? US stocks, India stocks, emergency reserves. If no, don't do it. Do I have genuine conviction in specific properties stake is offering? If no, don't do it. Am I investing at least 50,000 dirhams? If no, don't do it. Do I fully understand the liquidity, exit windows, no guaranteed buyer, and governance votes? If no, don't do it. If you answered yes to all 5, okay, maybe stake makes sense for 5 to 15% of your investment portfolio. If you answered no to even 1, skip it. Here's the bottom line. Stake isn't evil. It's a specific tool for a specific use case. If you're using it correctly, long-term capital, meaningful amounts, specific property conviction, it could work as a small tactical allocation. But if you're treating it like a savings account, investing small amounts, or haven't built your foundation first, you're doing it wrong. Build your foundation first. Watch my portfolio allocation video to understand the full strategy. It's linked right here. For goodness sake, don't put your emergency fund into a studio in Arjan. Interactive brokers and server links are in the description if you're building your foundation. Drop a comment and let me know, are you using stake? What's your strategy? Don't forget to like and subscribe. Yalla Arbab, now go boss your money.